Hello and welcome back to Invest with Humility. And on this video, we're going to look at how to make money in the market. So I'll write it here. How to make money in the market. Now we have already covered that the stock market is a zero-sum game, meaning for every dollar that you make, someone else has lost that dollar. Okay, so now the first way, the very simple way that you're going to make money is by going long. When you get to the market, you'll hear these two different vocabularies used periodically, like if you're either going long or you're going short. So the first way you're going to make money is by going long. Now you may be asking yourself, what is going long? So it basically means I'm buying the stock. So you buy a stock and you expect it to go higher, and you sell it at a higher price than so that you can make money. So essentially, you buy a stock expecting it to go higher. So let me draw a graph here. So let's draw this graph. So let's say you buy the stock here. You know that there's good news coming to the stock, or there have been like a build up of good news, and it's expected to be announced in a couple of days, and it has momentum, and you want to sell it, let's say around here, right? So this is going long a stock, okay? When you want to sell it somewhere around here, so you're going long. Okay, now let's look into details like what happens when you decide to go long. Again, if you buy it and it goes down, you're losing money, but that's going to be long. So when you buy a stock and you expect it to go up, then you're going long. But if you buy it and it goes down, you're going to lose money unless you have what we have highlighted here. What is this called? A stop loss. So stop loss are really important. So even though you think that, hey, I am going to, I'm betting on this stock to go up based on the news, based on a fundamental or technical analysis. If you see that it doesn't work out, you always have to protect yourself. Because one thing is, we'll discuss this in later modules about fear and, you know, at some point, you may think that you'll be losing out. Either it's fear of losing out or fear of um, or not taking profit, so to say, meaning you're just holding on to the trade and thinking that it will keep on going upwards and upwards and upwards. And in some cases, you just have to, always have a stop loss to protect you from your feelings, because the market is not emotional. You may make some trades which go well, but sometimes, it could be wrong and it's not your fault. Let's say if a big hedge fund decides to sell on good news, you can't control that. So it's good to have your stop loss so that your order can be executed before you lose a lot of money. Okay, so it basically means I'm buying the stock. So you buy a stock, you expect it to go higher, and you sell it at a higher price so that you make the money. That's the easiest way to make money. Again, if you buy it and it goes down, you're losing money. But that's going to be long. Okay, so we've discussed what long is. Then another way of making money in this way is one of the less common, is going short. And what does going short means? Okay, it means that you're betting that the stock is going to go down. So you want to make money if the stock actually drops in value. A lot of people go short. Not a lot of people know about it. So you might ask yourself, how do I sell a stock that I do not own originally? How can I bet on a stock is going to go down? Because by betting it's going to go down, what you're actually doing is you're selling it at a higher price. Okay, and when it goes to a lower price, you buy it back at the lower price. How can you sell something you do not own? Well, by borrowing it. So the way it works is actually you have to borrow these stocks. Now, who do you borrow it from? You borrow it from the broker. So you will go to your broker where you trade, if it's Interactive Brokers, or if it's Webull, or whichever broker which allows you to short stocks, or TD Ameritrade, and you will look at to see if you can short, and they will typically tell you like the short interest. Okay, you agree with that, you take those shares, and you can go ahead and short them. However, for those people who are long and who are just investors, you can always choose to lock your shares so that they're not made available for shorting. Because if you do not tell your broker that, then those shares can be used as part of shorting that stock. Okay, but again, the actions of one person won't change anything. But if a collective or many people do this, then it's going to change. But it really doesn't make a whole lot of difference, but It just has to, it just depends with your strategy in the long run. So how can you sell something you do not own? Well, by borrowing it. So we have already discussed that you'll go through your broker. So very simple. All you have to do is, if you're looking at a stock trading at $10 and you're thinking the stock is going to go to $8, so you want to sell it at 10. And when it goes back to 8, you want to buy it back at 8. How would you do that? So you call your broker, and you tell them, hey, I want shares of this company. Let's say you want shares of Twitter. Can you lend me some? Now, your broker has a lot of other clients. Your broker is going to look around. So he's going to see that, oh, some of my clients have the shares in this company. I'm going to take it from them. I'm going to give them to you. I'm not going to tell them that I took it from them, so they're not going to know anything that happened, right? They are sleeping. They don't know. They think their shares are still in their account, but they're not. I'll give you the shares. Now you go out, go to the market and sell the shares for $10. Now you got 10 in your account as predicted. The next day or the next week, the price falls to $8. Now you still have $10 in your account. You can buy back the shares at 8. So you buy them back at 8. You still have $2 in your account and you have the shares. Now you can call your broker and tell, hey, the shares I'm giving, I want to give back, the shares to you. Your broker Your broker gives back the shares to the original owner, put them back in their account. The original owner never knew they were gone, so had no idea what just happened. So you have left with $2 in your pocket that you made out of thin air because you sold something that you didn't own. And when you bought it back, you made the difference in price. So you can short a stock. You need a margin account to short a stock. You can't short a stock in any account. Okay, we're going to cover margin accounts in a later module. So you can short stocks when you expect the stock to go down. Now there are dangers in shorting stock, and it's only because of this, and it's only because of this that you should not be shorting stocks. So you should be careful, and I'll tell you why. How much money can you make? So this is a big question. So you can make good money when you short stock, but what's the maximum amount of money can you make? So it's a price that you short it at. So how much money can you make? So it's a price that you short it at. So if you shorted a stock at $10 and it dropped down to $0, how much money did you make? You made $10. Okay. Now, well, if you shorted a stock at $10 and the stock goes down, let's say it goes up to $14, what happens? You're losing money. You're going to give back that stock, and you're not going to hold it at an infinite amount of time. You're going to have to give it back to the original owner. So if you buy back at 14, you're actually losing $4. So if you buy back at $14 and then give the shares back to the broker, give it back to the owner, you have to buy it at the higher price that you sold it at. That you lost $4. Now the problem with this is that the price can go up not only to $14, it can go up to 20, 100, 200. It could be infinite. So the amount of money that you can lose is infinite, but the amount of money that you can make is limited. When you're going long, it's the opposite. The amount of money that you can lose is limited, but the amount of money that you can make is infinite. So you really want to watch out for shorting stocks. And another issue is that in the long run, there is a natural drift of stocks going up. So stocks tend to go up with little bit more probability than likely to go down. So it is something that's riskier. The very good thing about shorting a stock is when stocks go down, they go down extremely fast. But when they go up, they go back up slow. So a lot of traders, and this is one of my favorite things to do, we'll pick a stock that I feel is going to break down and short them very aggressively because I can make a lot of money in a short period of time, but I never keep the stock for a long amount of time because it's not going to do good in the long run. You just want a stock, you just want to short for a short amount of time because if there is something that's going down, it's going to happen quickly and then it might recover. Now, this is going long. Now, this is going long. This is now this is shorting this. Now, this is going long and this is going short. These are the two ways that you can make money. But now I add a third way that you can make money, and it's called flat. Okay, so a third way that you can make money is by being flat. And what do I mean by this? Being flat. Okay? Being flat means you have no positions. A lot of new traders come in and they think they always have to be in the market. They always have to have a position, either be long or be short, to be making money. But you can actually be making money, but by not being in a position, because if you're not in a good position, you might lose money. So by not losing money, you're actually making money. So being flat, having no positions, you're avoiding the risk of losing money. So you're actually making money by not losing it. So very important. If there is no good opportunity, if you don't have something, if you didn't do your research, you're if you didn't do your research, you're just busy somewhere else. You don't need to trade. If you didn't do your research, if you're just busy with other things, you don't need to do a trade. You can be flat, you can have no position, and that is going to be a way for you to make money. Every good trader, if he's busy, is focused. Don't trade, be flat. That's going to be a good position to be in. So these are the three ways that you can follow to make money, and that's going to be this for this video. I hope you enjoyed it, and we discussed how we can go long and how we can go short. Okay, so I hope you enjoy this video. Until next time, thank you again for watching and be blessed.